Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, June 14th, 2021, and I'm pre-recording this Trading Places Live for Tuesday, June 15th. Futures currently are green slightly. We've got the NASDAQ futures up about 15.5 points. The S&P 500 futures are up about 4.25, and the Dow Jones up 3 points. So it does look like maybe we'll get off to a little bit of a green start in the morning. Of course, things can change overnight, so we'll see how we open in the morning. Before we get into the show, I do want to just go through the agenda with you. So first, want to start out with the daily market recap. Then we'll get into talking technically. Question had come up about a negative divergence, so I want to show you one of the reasons why I think sometimes you can use a line chart, which is better than a candlestick chart. And I don't say that very often. I tend to use candlestick charts. But I do think the negative divergences sometimes will show up better looking at a line chart. So I'll go over that with you. Then we'll get into scooter reports. Got one industry group really made a breakout today. It's an industry group that led in 2020, had weakened earlier in 2021, but it is beginning to strengthen again, showing a lot of leadership. So we'll take a look at that industry group and go through the scooter reports, trying to find some interesting candidates there. Scanning strategies. There's a downtrend reversal scan that I really like. And when I ran it against our strong earnings chart list today, there was actually I think there were about a dozen stocks or so that came up on that scan. So I thought maybe that would be a good one to take a look at today. And then we'll get into the earnings spotlight and wrap up the show with 3 you must see. But before we get into any of that, let's go over to earningsbeats.com. Just want to point out to everyone that we are running our spring special, which ends on Tuesday. So June 15th, that will be the last day of our spring special. If you are interested in joining us at Earnings Beats, this is a great time to do so. From our website, if you click on that spring special, it'll give you a lot of the details. The most important things are, number one, it's a 14-month special, so you do get 2 free bonus months. And with that comes a $997 annual charge. And when you compare that to what you would pay over 14 months at our normal monthly rate of $147 a month, you actually would enjoy 52% savings. So this is a great time to join us at Earnings Beats. If you'd like, go over to Earnings Beats and start your trial. We do have a no-cost 30-day trial. There's a $7 fee when you sign up, but we will refund it within the first week. So for 30 days, you can enjoy our service literally at no cost. All right, let's move on here and talk a little bit about the recap from Monday's action. The Dow Jones Industrial Average was down 85 points. The S&P 500 was up 7, setting a new record, by the way. That's a new all-time high close on the on the S&P 500, 4255. The NASDAQ was up 104 points, closing at 14,174. Mid-caps down 25. So mid-caps did get hit a little bit, down 1%, close to 1% on Monday. Small caps down less on a percentage basis, down just a little under 2/3 of 1%, down about 9 points. All of our major indices, though, I think continue to remain in this uptrend. I think they look good. One thing I really like about the S&P 500 is as it makes these new highs, you can see the AD line, the accumulation distribution line, moving up again. So that is good news. From a sector perspective, the best performing group on Monday leading the S&P 500 to those all-time highs, technology. We haven't talked about technology much. Yeah, it's been a while since we've seen some relative strength there, but technology on a relative basis now beginning to lead. And you can see that double top back in April. We're threatening to break above that and close above that. So watch for that on Tuesday. We'll see if we get some follow through in the technology area. Communication services, strong move, closing at an all-time high on Monday, up about 2/3 of 1%. That was solid. Real estate bounced back A little bit of a surprise for me. I thought real estate might pause a little bit more, a little longer, but we did rally on Monday, finishing up more than 0.5%. Not breaking out again yet, so we'll see whether or not we can get through that 46 level. I'm still expecting more of a short-term period of consolidation, maybe a little bit of selling in real estate. Materials, the worst performing area on Monday, down almost 1.25%, and testing their 50-day moving average. It's been a long time since materials have been down the 50-day moving average. It's been back, I guess, the first week of March was the last time. There was a negative divergence. You can see that PPO had rolled over, even though we were trying to make breakouts here. So I think settling back to that 50-day was probably a good thing. We'll see whether or not we can hold the 50-day. That's going to be important here in the short term with materials. Financials continuing to drift lower, down more than 1%. And this has been going on now for about 6-7 trading days. And this comes despite the 10-year Treasury yield bouncing back to the upside. I'm going to talk about that in just a minute. But normally, financials, they tend to move in the direction of the 10-year Treasury yield. And we did not see that on Monday. Financials down more than 1%. So moving on to that 10-year Treasury yield, you can see we did bounce back almost 4 basis points on Monday, closing back at 1.50%. That was an area of support after we had moved up to 1.75%, had that double top back in March. Negative divergence, we pulled back, got close to that 150 level, never closed below it until toward the end of last week. And even with some hot inflation news coming out last week in terms of the May CPI, we still saw the 10-year Treasury yield break down below 150, and that was a little bit of a surprise to me. But we rallied back today, got to 1.50%, and on Tuesday, got a number of economic reports coming out. I mean, there is a slew of economic data. May PPI expected to come in at 0.5%. April was 0.6%. So we're actually looking for that May PPI number to drop a little bit, although it's replacing a number from May of 2020 that was much lower. So we're going to see that headline PPI number rise again tomorrow. May core PPI rose 0.5%. April was 0.7%. So again, we're seeing it slow down a bit, but the overall number year over year should show an increase from 2021 back to 2020. May retail sales will be out on Tuesday morning. Expectation there, not very good. We're actually expecting May retail sales to decline about 0.5%. April was flat. If we strip out the autos, May retail sales are expected to climb about 0.2%. April was down 0.8%. So we are looking, if we strip out autos, we're looking for retail sales to pick up. With autos, the number is much more bearish. June Empire State Manufacturing Index. May was 24.3. June, we're expecting to drop back to about 22.5. May industrial production, 0.6%, 0.6% rise. April rose 0.7%, so just a little bit of a tick lower in May. And then looking at capacity utilization, April was 74.9. We're looking for that to bump up just slightly to 75.0%. And then finally, June housing market index expected to come in at 83. May was also 83, so looking for no change there. All right, looking at the chart here on the 10-year Treasury yield, I'm not seeing a whole lot. What I will say is this, though. As we have moved back, you can see the damage that's being done in the financial area. Financial stocks have been moving lower on a relative basis after a nice run up for a period of time. The last 2 weeks or so, not even that, week and a half, has been very weak on a relative basis and on an absolute basis, but especially on a relative basis. You can see that drop there. Industrials doing the same thing, also falling back. So these are two groups that tend to do better when economic activity is strong, when yields are rising, and when we see, like we saw about a week and a half ago, with the non-farm payrolls coming in a little lighter than expected, and we've been seeing the yield moving lower. That combination is having a more bearish impact on financials and industrials in the near term. All right, let's move on to talking technically. So the first thing I wanted to show you here was on the materials chart, the XLB. When you look at this, you can see the 50-day moving average is tested. You know, when you look at the price action, you can see that the PPO had rolled over. See how the PPO is lower here? But it also looks like price action is lower. So you wouldn't think, okay, there's no negative divergence, because a negative divergence requires higher prices with a lower PPO. Here, we have lower prices with a lower PPO. But that is a bit misleading, because what we're looking at here with candlesticks are intraday highs or opens, when in fact the MACD and the PPO, two momentum indicators, they're based on closing prices. If we switch this from a candlestick chart to a line chart, it will connect closing prices. Now I want you to look at the price action when we do that. So now I've just switched this to a line chart. Now you see the higher close. So the XLB actually had higher closes with that lower PPO. This is one of the few times that I think you have an advantage using a line chart over a candlestick chart. A line chart connects the closing prices. So it doesn't care about where it opens, doesn't care about the intraday action. It only cares about the closes. Well, the PPO is also based on the closes. So it makes sense when you're looking at potential for divergences to look at a line chart, because that kind of gets rid of all the other noise in the candlesticks and only looks at the closing price. So here, the XLB, clearly higher price, lower PPO. We have a negative divergence, and now look at what has happened. And this is exactly what I look for when we have a negative divergence. Look for a 50-day test and or a PPO centerline test. And it looks like we're about to get both. So at this point now, you know, these negative divergences can, they can print long-term tops, but you don't know at the time that a negative divergence prints, whether it's long-term, whether it's short-term. What I look for is for that momentum to the upside, which is obviously showing signs of deterioration or slowing. I look for that to kind of be reset, that momentum. And when I say reset, what I look for is that zero line on the PPO and that 50-day test. I think if we get those, we have in essence, I guess, I don't know what the right word is, but we've kind of started over. I always use the analogy of like a 3-game set in baseball, where you might lose the first game 10-0, but when you start the second game, you go back to 0-0. You don't start losing by 10 runs. And that's really what I look at here on the charts when I see these negative divergences. Materials had a negative divergence, but now that we've gone back to the zero line and back near the 50-day moving average, it's almost like the game starts over again. Maybe we break through the 50 and start a downtrend, but a lot of times you'll get this temporary sideways consolidation, and then we break back out and start moving back to the upside. So I think it's just too early to make that call. I'm not a big fan of materials and energy going forward. I'm on record saying I think the dollar is going to strengthen later this year. And so I think that's going to be a problem for the group. But if the dollar doesn't strengthen, if I'm wrong on that call, then chances are materials are going to bounce right off this 50-day and move to new highs. All right, let's keep moving on. I wanted to talk a little bit about the home builders, because home builders have been struggling. So if we pull up that chart, And actually, we can take it off of the line chart, go back to the candlesticks. This was a group that was leading. And at this high, you can see that doji printed at the high with a slight negative divergence, higher prices, lower PPO. This actually looks like more of a top, and I don't want to say long term, but maybe intermediate term as opposed to short term. I think we're in a downtrend right now in the short term. We pulled back, went through the 50. When we bounced back up, you can see us failing right at the moving averages and now rolling back beneath the 20, which is now beneath the 50. We've moved to new lows. Volume trends have turned weak. And look at the PPO in negative territory and moving lower. So it's really difficult to make a bullish case for home construction right now. And that's even though, we've seen interest rates pull back here of late. I don't know that they're going to stay low because I do think that the economy continues to pick up. I don't look for any kind of long-term downtrend here in home builders, but what I do think is going to happen is we're likely to see rotation out of this group for a period of time. And then at some point later this summer, maybe in the fall, I would expect to see money rotating back into home construction. Another group that I think is worth mentioning here during talking technically while we're at it is the commercial vehicles and trucks index. This is a group that I am not liking. I've been talking about this in the daily market report with our members at Earnings Beats. I've talked about Deere and Company. I'll show you that chart in just a minute. But I don't like what's going on here. We had gone for a long period of time with this PPO, daily PPO above the zero line. That is clearly changed, and we are now well below the zero line and continuing to move lower. Price action is below the 20, which is below the 50. Volume trends have moved much more bearish. And so I would be really careful with this group until we put in signs of a definitive bottom and maybe start to begin to consolidate. I don't think we're just going to go straight back to an uptrend. This is a group that went up for a long time. I think we're going to consolidate best case and sell off worst case. It's not a group that I would want to be a part of. If we look at Deere, and this is one recently that I just talked about, like maybe 3 or 4 trading days ago when it was breaking down below 360, this stock continues to drift lower. Volume trends are bad. That PPO is horrible. The stock went up a lot in a fairly short period of time. I mean, we're talking about within a year from $150 to $400. So it's okay if it pulls back for a period of time. You just don't want to be in it. You don't want to be riding it. I'm looking for the stock to get back down somewhere between 300 and 320. We're at 335 now. We'll see what happens when we get there. I would expect at some point, between now and then, we're going to see a bounce, probably back up to test that 20-day moving average. But I do think eventually we're going to fill this gap all the way back down here to 300, maybe just below that 300 level. So watch that price level on Deere. The last chart I want to show you during talking technically is the software index, and we just made a breakout. We closed at 49.70. If you use this inspector button, you can see where we had closed previously. 49.33 was the high close back on April 26th. Never had a higher close after that. We pulled back. May was a rough period, at least first 10 days. Of course, that was when we had the April inflation data coming out. A lot of these growth stocks were getting hit hard. And now here we are 1 month later, and we're breaking to all-time highs in software, a growth area. Does that sound like inflation is a big concern to the market right now? Because for me, it's not about the news. It's about the reaction to the news. What is going on in the market? Software is breaking out. We just had on Thursday of last week, the May CPI number come out. We hit 5%, the highest level we've had in 13 years on inflation. That should be horrible for growth stocks. And you can see the software group was rising all of last week. And now we continue it today and break out to an all-time high. So the PPI will be out on Tuesday. We'll see what happens there. We got the Fed meeting Tuesday and Wednesday, policy statement out on Wednesday at 2 p.m. Eastern. We'll see what happens. Again, I don't like to try to call the market based on the fundamental data. I like to see the market's reaction to the fundamental data. And what I'm seeing right now is that the market is not worried about inflation. You can talk about inflation all you want, and you might be right. But what I'm saying is right now, the stock market doesn't care. And as a trader, I want to go with what the market sees, not what I think should happen or what I think might happen. I'm looking exactly at what the market is doing. And so I don't see the market being very cautious at this point. I see a lot of these growth areas really beginning to pick back up again. And that's right in the face of all of this inflation data. All right, let's go ahead and move on to scooter reports. And software was kind of going to be the topic here. So let me show you scooter reports, what you can do. So well, let me go back to your dashboard so I can show you how to get into there. So on the left side, you can see under member tools, if you scroll down under summary pages, you'll get at the bottom of that scooter reports. So click on that. That brings you up to this where I just was a minute ago. Large cap stocks is the default. What you can do is type in software, and it will bring up all of the large cap software stocks in scooter order. So you can see which stocks are performing well and which ones aren't. You can hit scooter again and it'll show you the low software stocks, the ones that have not been performing well at all. So it depends on your style. If software begins to break out, do you want to be in stocks that haven't been performing well or have been performing well? I like leaders, but everybody's different. That's one way you can look at software though. And then you can go into mid caps. See, these are the mid cap stocks not performing well in the software space. And then hit this column again, and it'll bring up the leaders in mid cap stocks. And then go to small caps and so on. So just give you a really quick look at some of the stocks that you might want to consider from a trading perspective. So if we take a look at these, I can tell you one thing, MicroStrategy is their short interest is really beginning to build. So a lot of folks betting against that stock, and you can see the move it made on Monday. Look at that volume picking up, closing back above the 50. We could see this could be the beginning of a short squeeze in play. Another stock, DOMO, which is Domo Inc. You can see this is not far from a breakout. 76, 77, that area is key resistance. We're up to 72, almost $73. Let's see, how about one other one? Let's do CVLT and just show you that one. This is one that's broken out. Look at the volume that came in to confirm this breakout. Nice little cup, maybe a little handle, or maybe you can call it equal highs, higher lows, so an ascending triangle, whatever you want to call it. We got a breakout. We had confirming volume. Stock continues to move higher. I think any kind of a move back into the low 70s would be extremely solid entry into CVLT. All right, let's move on to scanning strategies. So one of the things that I like to do at earnings beats is we have a downtrend reversal scan. And essentially what we're looking at is companies that keep putting in lower highs when they finally put in a higher high. And I'm talking about on a daily basis. So picture a stock that's been going down, printing lower highs for 5 days in a row. And then today prints a higher high. Now, does that mean you have a bottom? No. But when you're downtrending, you cannot start an uptrend until you have a higher high in play. And so that's the whole reason for running this scan. So I ran it against our strong earnings chart list, and I got results back, 13 of them today, where companies are showing stronger, or starting to show strengthening chart, where they've actually printed higher highs after printing lower highs for 5 straight days. So I'm going to put this in scooter order, and let's just start with the highest one here, SM Energy. So energy stock's been a little weak of late, pulling back 5 days in a row, lower highs. Today we actually showed a higher high. Now, does that mean we're gonna start an uptrend? No, that doesn't mean that, but it could. That we could see that. How about this specialty retailer, Con? After moving down 5 straight days of lower highs, we actually put in a higher high. Now, we didn't finish strong, so maybe we're going to continue to move lower, but this gives me something to work off of, to look to see if I like a chart. And that's really what I'm looking for, and that's what I'm doing going through this this process. So this one doesn't have a scooter score, but let's take a look at CRCT. So here's a stock that's been going down 5 days in a row. Now here I've got a bullish engulfing candle right off the 20-day moving average. This is a chart that I would be interested in. I don't own CRCT, but this is one that I think has a decent shot to begin a recovery, perhaps back to 38, 38 and a half. And we're sitting at 33.93 right now. All right, so that's one of the scanning strategies that we like at Earnings Beats. Let's move on to the Earnings Spotlight. And what I wanted to just point out, on Tuesday after the close, Oracle will be reporting, ORCL. This has been one of the best software stocks. And I just looked at software from a scooter perspective, looking at the scooter reports. Here is the chart. And when I look at Oracle, I see a stock that's really improved. The AD line, the last 3 or 4 months, very strong. Obviously, price action moving up. Volume trends look good. Relatively speaking, you can see Oracle, relative to the software group's been moving up now for about 3 or 4 months. So I think this is a really nice looking chart. They do report earnings, though. You never know for sure what's going to happen with earnings. I think the numbers are going to be very strong for Oracle. It's just whether or not we actually get that positive reaction. A lot of this might be built in. Any kind of a pullback, especially down to that 50-day moving average, I think would be a very positive entry, potential positive entry into Oracle. All right, let's move on to the 3 you must see. I'm going to start off with Lyft, LYFT, another software stock. It went up, and it actually moved to about a 5 or 6 week high on Monday, but it couldn't close there and came back down. So I think there's still a little bit more work to do here. Watch that 20-day to the downside. Lyft, you want to get a close above 60 to confirm that move. Roku. Now, Roku, on the other hand, saw volume pick up, and it did move and close at about a 6 week high on its chart. So I like what's going on here. I think Roku's got a great shot at running to 400 to test that high back in April, and then we'll see whether or not we can get through. Last one, this is a stock I actually bought on Monday. RMD, I love this breakout after a long period of consolidation. Huge move. Look at the volume come in. I think this one's got more upside, and so I'd be looking for higher prices here. All right, that's it for me. I want to thank everybody for tuning in. I'll be back Wednesday over at earningsbeats.com for your next Trading Places Live. That will start at 9 a.m. Eastern. Have a great day, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.